Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, we're going to be going over something that I should have made a video on a long time ago, but we talk about it all the time in the live room, and that's looking at confirmed swing trade trap setups. Right, so confirmed swings is something that we have to understand what that is first, and then beyond that, what is a confirmed swing trap trade? Right, how does that work? So a confirmed swing, just so we're on the same page, which I know there's a lot of videos on them, but if we just make it really simplistic, let me use just a horizontal arrow, and I'll make it really big so we can see it. And there we go. So we'll start off from the lows and from the previous obvious high afterward, and we'll just kind of go from there. And the reason I'm starting there is because this move higher broke all of this, right? So the fact that we've broken all of that means that this is a new confirmed high, but it's not a confirmed high until we cross back above. Right? Once it makes it back above, this is a confirmed swing high, and that also means that this is a confirmed swing low, and then we can narrow this up. So this low would now move up to here. And these would be the confirmed swings that we're on at the moment. Now, we do have another break above, so they're currently developing another one. We don't know when that's going to be until we get a little bit more info. But at the moment, this is where we are at in terms of confirmed swings. So if we take that same mentality and go backward a little bit, just to really drive it home, let's go back a bit further, and let's start over, let's go over here. So we'll start off on the very top, and then before that, right, if we go backward, where would the confirmed swing be before that? Well, it would have to be this low, because that was the lowest point that the market had made before the high. And again, it was proven once it broke back above. So we know that that is a confirmed swing, and we have now broken underneath it. So once we start breaking underneath it, this is the confirmed swing high, and we're just kind of going along with it. Now, in this case, we have a shallow little bounce right here, and given that bounce has come up and it's broken a previous high, it's kind of interesting, but again, we don't know that this is going to be the low until it breaks down again. And once we've had this big of a bounce, we know that there's a potential that the confirmed swings have now gone and moved their way down. The new confirmed swing high is here. That hasn't been broken. We've got a new low underneath here. They keep breaking lower and lower and lower. We finally get a halfway decent pop that breaks above some previous swings, and that narrows it down and is proven once we broke back below the new lows. You kind of get the idea as to how these progress. So they're making new lows, new lows, new lows, and at this point, they really didn't do anything until they started breaking above, so there was a possible trend shift. Now, when the market's possibly trend shifting, we broke above the highs, and they moved down and they made a higher low. This was not confirmed, again, until they broke above the highs, so we moved this over here because it made a new high. Once this is confirmed, we now know that given that break higher, we may have to look at this from a confirmed swing moving up a little bit further, because this is the lowest point that was made after that high, and this is a confirmed trend reversal. So just keep that in mind as to how this works, right? Because what we want to do is we want to find previous zones of interest or previous major swings on a trend that's been going down for quite a while. And this is going to put traders in a really awkward situation because they don't know where to put their stops. Where should I put my stop? Should I mark it up where it is here? Should I trail down with it? Where do I get in? Where do I get out? As an example, if you were a short seller and you sold over here, in the market, maybe you started with your stop up here, it starts moving its way down, well, where do you go now? Right? Do I put my stop above this? Do I keep going along down to the lows and moving down? We've got another minor confirmed swing, which is right here, so do I put my stop above this? If I'm not in a trade already and I'm looking for a way in, you just kind of saw it right there. I'm looking for these confirmed swings to give me zones of major interest. We know that we broke down here, so definitively we can say that would be a low. We've got a new high that broke down to a new low. They popped up to a new high, they broke down, etc. We already talked about this cycle. But what I want to see is previous confirmed swing high, major confirmed. We go down, we have another confirmed swing high, and then we have the low. What I love looking for, and one of my absolute favorite scenarios, sorry for the white out there, jeez, is looking for the market to trap one of those previous confirmed swings, but not break the other one. This is much more preferable if you can get a situation where your risk reward, it fits for like a 2 or even 3 or 4 to 1 to the downside, preferably even 5 to 1 if you can get it, because the higher up, the better when you're looking at that risk reward. And if we catalog that, again, put this arrow over here, and we take the other arrow up here. Those would be the two previous confirmed swings. So sellers will start stacking in above this high with the assumption that the trend is going to keep going to the downside. Obviously, overarching context helps a lot, but it shouldn't break above the next one, and that's their stop area. So what they'll look to do is trail along with this move, trap into it, and see how far does the market pull back against them. They can utilize this as an actual risk objective, and at the moment this is a 3-to-1 actual risk, but if we were to move it to, let's say, a 5-to-1, it looks like they might have hit, oh yeah, to the tick, 5-to-1 actual risk to the downside before reversing back up. But even then, we never really did break above that previous confirmed swing, so we've got to go up here and think, well, maybe these traders are looking for the same opportunity. 2-to-1, that fits to the downside. We get a little bit of bouncing, but they crack through it. They break back up and retest it as resistance. That means the next objective would be 3-to-1, which they bounced off of perfectly right at the base. So if they're going beyond a 3-to-1, then the next one would be a 5-to-1, which was down here, and that was also hit. And that ended up being the reversal point later on. So major areas of interest that these can line up. And the thing that's so fantastic about this type of setup is not the probability, right? I'll be upfront. The probability is not great. When you're looking at a trade that's 2 or 3 or 4, 5, 7-to-1, depending on where you can get in, the probability is not going to be very good. But if the overarching context is solid, you can still hit these in the 35 to 39-ish% accuracy rate. And with a 3-to-1 potential runs to 7-to-1, that's incredible trader's math. So that's what I'm looking for, these traps on a previous confirmed swing, but not breaking the one above that and looking for potential reversal zones. Now you can zoom in faster and look for volume, flow, flips, and all that fun stuff. But that's the basis, the major zone of interest that I like keeping an eye on. And that's the idea behind a confirmed swing trap trade setup. Hopefully you found that useful, interesting, entertaining, and of course, if you have any questions, drop those in the comments below or shoot an email in if it's a little more detailed, jhb@ssftg.com. Have a good one, and we'll talk to y'all later. Thanks.